Let's get straight into the market activity that came through. As I said, we had Safaricom leading the upside on the local bourse in yesterday's session. What did you make of the kind of activity that came through, and what kind of tone it set for the trading day ahead today?
Okay, welcome. Thank you. Safaricom actually has seen a renewed interest because of the stellar profits that it recorded. And this has been on the back of increased revenues from non-voice sectors, namely the M-Pesa, which saw a 10.4 billion return on the last quoted results. This was also buoyant to the public in the sense that, as you said, yesterday Safaricom touched 5 shillings a share, which was the IPO price. You saw quite a bit of activity because of a bit of profit taking, and people who are also exiting who entered at the IPO level. This level will be sustained, but not for long, because there'll be a bit of pressure, people trying to take profit. But going forward, Safaricom is a strong brand, and because of the uptake and the growth of the market, we expect better profits going forward. Today, on the week ahead, it should be hovering between 4.9 to about 5.1, depending on the activity on both sides, because we're bound to see quite a bit of overseas investors flocking back into Safaricom.
As a local investor, Karanja, I mean, sitting at about this 485 mark at this stage of the game, would you be a buyer?
At this point, I'd be a buyer, because I expect some buoyant push to about 530. Then I'd exist at that level, because then it is going to taper off.
For now, though, it's those financial stocks that are stealing much of the limelight when it comes to the markets scene, and that simply because of the kind of results that have been filtering through, hitting the wires this morning. Numbers out of CFC Stanbic Kenya in particular, posting a 35.6% increase in pre-tax profit, and that for the 9 months ended September. It's hit 3.2 billion Kenyan shillings. What do you make of that headline number?
Actually, the financial sector has recorded some very good profits. This is on the back of the high interest that have been charged on the loans for the past about 9 months. This has also resulted to increase in loans in certain sectors. But this is not going to continue further, because we've seen the central bank reducing the policy rate from a high of 18 to 11. And so this is likely to bring down the interest income on the banks. However, because of cheaper credit, we are bound to see a pickup on the real estate, which had kind of eased off, and also the SME sector, which will also be willing and ready to pick up more credit. So it's a balance of. However, the financial sector still remains quite buoyant, because this additional credit will lead to a rise in the GDP in the country, and this has a knock-on effect on other sectors, which will permeate into the banks.
Of course, credit extension and growth in the loan book aside, Karanja, looking at the non-interest income line here, it's increased to 5.4 billion shillings, and that from 3.2 billion shillings. So that really highlighting the fact that we've got financial players within the Kenyan landscape looking to grow the non-interest income side of things pretty aggressively too.
Yeah, that actually, it's a good point, because we've seen a lot of infrastructure projects. So part of this income is through advisory services, and also we've seen quite a bit of activity on the FX side. So this non-interest income is basically from advisory, players wanting to come into the market because of the exploration. We've seen the gas at the offshore, and the oil in Turkana, plus the prospect of coal in Kitui. So all these projects, we're seeing more and more players wanting to come into the Kenyan market. There's also the interest on the real estate, because we've seen renewed interest in shopping malls, and this because there are new players would want to kind of get a grip on that. And also on the energy sector, we've seen that there's been a lot of renewed growth on that. We've seen the Kenyan doing the 280 megawatts at Olkaria. There is also the potential of them looking for 420 billion shillings for expansion. So all these are advisory services that the banks are chipping in, and there's a stream on the non-interest income in the future and at the present time.
On the real estate side of things, making headlines today, low-end landlords spared KRA drive to net property tax, and that with the Kenya Revenue Authority saying that it will only pursue big property owners in this regard. What do you make of that news coming through and the implications it has for the markets out there?
Well, that is quite a reprieve, because in my view is that getting taxes from all and sundry landlords was going to be a quite costly exercise for KRA, and in terms of returns will not have really bared much fruit. However, concentrating on the commercial and the large landowners of gated communities and large housing complexes, this is going to be an easier way in terms of administration and in terms of the revenue that are going to stream in, because the revenue that they desire to get from that, the target is about $1 billion. And working with the local authorities, financial services, and the utility companies, water and electricity, they are able to easily map and know the identities of the landlords, and in terms of location, and so in that way they'll be able to collect their rates much easier. On the converse, because there was a fear that once the KRA starts taxing, levying landlord taxes, there was going to be an increase on the rentals. On the commercial aspect, because they're generating huge returns, that will not really be a very huge cost, which they will easily pass on to their consumers, so they are able to bear it much better than individual landlords.
Karanja, of course, that very interesting news, because it's in a context where we've had a tax revenue rise 13.3% already in the 4 months to October 2012.